Hey, what is going on, guys? It is John Fibonacci. Welcome to my YouTube channel. Don't forget to like and make sure to subscribe and turn on notifications so that way you're able to see future content. All right, I would appreciate that. So today I want to talk to you about my indicator. So if you don't know already, you can go to public scripts. You can search up John, J-O-N, and you'll get my John Fibs London and New York Open indicator. So the only issue with this indicator is that you can't really use it on a daily time frame or higher. So it's really only for intraday trading. I know a lot of people are day traders, so there it is. And then as well, the lines, okay, are automatically drawn, but the times are customizable, okay? So if you go into the settings, you can change the time. So one of the things about this indicator is that you have to change the times if you're going to look at the futures. So my futures data, I have to either add or subtract an hour, okay? And there it is. So my London session is plotted from 3 to 11, okay? But even though it says 3 o'clock, it's actually posted at 2 o'clock. So you kind of see what I'm talking about. I have to put in for 3 and it'll plot it at 2. So I am from Houston, Texas. I'm the CEO of Trade House Houston, LLC. All right. So the times are going to be posted in Central Standard Time. All right. So if you're Eastern, then you're going to have to bump this up an hour, or, you know, whatever time zone you're in, you're going to have to do some math, okay? Some time zone conversion, all right? So there you go. What I want to talk to you today is kind of a continuation on the logical use of Fibonacci, but really incorporating time and a little bit more logic, okay? So I've got a photo for you. I just took a picture of this, okay? So whenever you look at current price, now I'm going to be referring to the current price as the session opening, okay? So today we're going to be talking about London Open because we're going to be sticking to currency with this particular video. All right. And when I day trade EURUSD, GBPUSD, all right, fiber and cable respectively, I like to note the opening price of the session. Okay. So when it comes to directional bias, right, I'm not going to teach you how to do that in this video, but when you get a directional bias, you can then use the opening price as a I don't even know what the right word is, but basically if you're bullish, okay, let's just say you're bullish because the dollar's been weak the last couple of weeks and the dollar's been going lower, and so that means foreign currency higher. So we're going to be taking a look at EURUSD and some buying opportunities. So if we're in a bullish environment, what I like to do is buy below the opening price. And so what that means is not only for the day, but you can also tailor that to the session. So again, if you're in a bullish condition, I want to buy below the opening price. So you can kind of see that on this chart, and this is the logic, okay? It's not like exact, but again, it's the logic. Same thing with Fibonacci, right? It's not the magic behind the Fibonacci levels, like, oh, the 618 is just magic. No, the 618 is just a cheaper price than paying at the 50% retracement or even buying at the high, right? You don't want to buy price when it's high. You want to buy price when it's low. So you can also do that by looking at the session opening price. And then if we're in a bullish condition, we want to see price drop lower for that sale. Now the sale, I mean, you guys, you know, this is the easiest example that I can think of, analogy, is by a sale price. You know what I'm saying? Where if you go to the store or something, or if you're on Amazon shopping, you know, you've got something in your Amazon cart and something goes on sale. Oh, it's Black Friday. Oh, it's Cyber Monday and we're having a 10% off. Even on TradingView had a sale recently for their, you know, subscriptions or whatever for the accounts, right? So it's the same thing where they have a regular price, the normal price, and then they have, let's say, well, TradingView actually did a lot more than 10%. I think it was 40% off, 50% off, and 60% off. So their sales probably went through the roof because, 50% off, 60% off for a year of the pro account. I bought one. I buy it every year. And, so with that being said, that same logic happens in the market where you have your opening price drops lower, that's your sale, whether it's 10% off. This is just the logic, guys. It could be, 50% Fibonacci or something like that. Again, it's just the logic, okay? Opening price drops lower. You want to be buying that in bullish conditions. That's what I look to do. And then price rallies, and essentially that's your trade, okay? So let's kind of go through some examples in the chart. All right, so today's December 17th. Again, the dollar has been bearish. The dollar's been sliding lower. You can see it over here. It's at 89.80. Okay, so it's definitely been dropping, and so that means EURUSD and other foreign currencies most likely higher. Okay, so I've already got the lines for you here, so you can kind of see the logic behind what's been going on. All right, so today just ended. I think today is Thursday. Let me just double check. Yes. So Thursday just ended. Okay, now we're heading into Friday's candle. All right. So check this out. Let's talk about the logic, okay? So what we're going to do, I'll just use the brush tool and I'll use blue. All right, or actually green. We'll do green for like buying, right? Okay, perfect. Let's make this thicker. Okay. So you see price opened here. Okay, we had London this morning for me. Price dropped lower, rallied higher. You see that? So open, drop, that's your sale. Boom, price rallies. Okay. So on the 16th, price did open and rally first, but the logic is still here where price came below the open. You can see that because that's the opening price here. Price traded below the open, rallied away. Okay, so the logic is still there. Open, lower, sale price, boom, price rockets higher. Now, I'm not going to go into detail as to why it did that. And personally, this late in the afternoon, I don't really trade that. But again, this video is for the logic, and I want to show you examples. Okay, so moving forward, actually technically backward. Anyways, so here's the open. Okay, we drop a little bit, we rally, we came back below the open again, rallied away a second time. Okay, so the logic is still there. All right. Scrolling back a little bit, this was kind of a bearish day, and it works the same way, where if you're looking in, or if you're in bearish conditions, you want to look for a shorting opportunity above the opening price. So this day was a little bit different, whereas we had open, rallied higher, and then dropped lower. Okay, so buying below the open in bullish conditions or shorting above the open in bearish conditions, it works the same way. Okay. So we'll take a look at a couple more examples. This day in here, December 11th, I believe that was a Friday. Okay, so just for sake of clarity, okay, I don't trade Fridays. I really don't. And this type of concept is not really going to be ideal to trade every single day, Monday through Friday. I only really trade predominantly Tuesday, Wednesday, and Thursday. Sometimes I'll take Monday. Sometimes I'll take Friday given certain conditions, very specific conditions, but I'm not going to go over that today. All right. So anyways, let's take a look at a couple more examples. Here is December 10th. Hey, my birthday. All right. So we had the opening price here. Price opens, drops, rallies a little bit, and then comes back below the open one more time and really rallies higher. Okay. You even if you missed that, right? Price rallies and then comes down. This probably is 618 retracement here. That's still a good buying opportunity. You're not getting in below the opening price, but hey, that's still tradable. And then price rallies away into the next day. Okay. So we'll show you a couple more. Here, all right, is actually a bearish example. Okay, so you had your opening price, rallies away, drops, comes above the open one more time, and then collapses lower. So you would be looking to short above the open on this particular day. So if we go ahead and throw in a little bit of Fibonacci logic, okay, you have your high and then you have your low, right? Let me just do this real quick. I want to zoom in, make sure you guys can see this, okay? High, low, price retraces, and you guys already know because you've seen the videos hopefully. Between the 50 up to that 786 is ideal to look for a short position, okay? And there it is. All right, price really collapses lower. It comes back above the close to the open here. So still tradable. It's not ideal, but it's still tradable here. And then once the New York Stock Exchange pretty much opened, that was it. All right, euro really collapsed lower. All right, so again, high, low, above open, 50%, done. Okay, so the logic is still there. All right. This particular day, kind of a flat day. Ugh, you know, I don't really like trading those, but with these highs and these lows, that set up the condition for this here. So you kind of were, if you took a loss on this day here, you could definitely get it back on this day. You have some highs right in here that pretty much got swept there, and which is what led to that short position. So this day was ugly as far as the price action goes, consolidation day, and this is why I said, you know, it's not ideal to trade every single day. Okay, so we'll go through a couple more examples. All right, here's another logic. Okay, opening price drops lower and then trades above the open. All right, so logic is still there. Open, sale price, rallies. Okay. Not really too sure what was going on this day in particular. Probably shorting above the open in bearish conditions. Okay, looking at hindsight, obviously, I don't know. I don't know if there was news. I don't know if we're in a higher time frame. I don't know. Okay, so there it is. We'll go through another one here. Open. We rally higher a little bit, entice buyers. Those buyers basically take drawdown here. So price drops lower below the opening price, and then price rallies away. So again, the logic still there. Open, sale price, higher. Okay. And then there's even, I'll throw in this as well, there's even this move right there. Right there. Price comes back below the open one more time, and then it also trades into this right here. Ooh, look at that. Okay, still below the open. All right, and boom, price rallies away. Okay, and then this will be our last example. Opens. Okay, there's your London open. Price drops lower. Oops, lower, rallies away. Okay, so it's that same setup. Open, drop. That's your sale, rally. You see that here. Open, drop, that's your sale, rally. So I'll leave you with this. You know, trading in this type of environment, it may feel, you know, contrary because you're buying as price is going lower. So it could be a little bit nerve-wracking at first. And this is why you have to pay attention to the higher time frames to get directional bias. So if you're bearish on the higher time frames, then you can buy lower time frame retracements. Okay, so there it is for you. That's the last gem I'll throw in there for you. And that is pretty much how I look at the London and New York Open indicator. Okay, that's why I had it made. It's really good for back testing, right? If you want to back test, I believe let me see one thing real quick, because I want to say, let me see. Okay, I don't know. But the indicator plots, I'm pretty sure every single day as far as trading view will show you. So you can backtest a lot of these days. It plots London Open every single day. I mean, this is October, so you can go back and study every single day for quite some time. So it's definitely a tool that you can use to backtest. You can backtest a lot. You can spend many, many hours just backtesting London Open. And of course, if you want to go look at New York, then you can do that as well. Or some of you may want to add both, where you could plot both London and New York. That way you could study maybe the overlap between the two. Maybe that's something to think about or something to consider. All right. So with that being said, guys, I'm going to go ahead and end it here. And I hope you learned something, and I hope you have an amazing, amazing day, and I will see you in the next video.